Hi, I'm Mike Sintolo, editor of Cabot Market Letter and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. Well, the market had another good week this week, and from a top-down perspective, all looks well, and you should continue to lean bullish. But underneath the surface, there is some rotation going on among leading stocks. Nothing to really worry about, but something to be aware of, especially as we're in the heart of earnings season. Let's dive into the charts here and start with the NASDAQ Composite. And you can just see, after a big run here, we had a 2-month correction, sort of an inverse head and shoulders, a dip, a lower dip, and then here the most recent dip, low lighted by the Standard & Poor's downgrade, which might have been the bad news at the bottom. And since then, it's really been up almost every day. So from an overall market perspective, it looks like, we are coming out of this market correction, hitting new highs in the major indexes. Underneath the surface, it's not so clear. There are some stocks that were extended that are pulling back and money is rotating into other areas. Of course, you have earnings season, so you have some potholes and some shooting stars. I think the main message here is you should continue to lean bullish. We wouldn't be fully bullish quite yet because not every investor is rowing in the same direction, but you should really look for the stocks that are showing great volume action, telling you that investors are piling into them and there should be support if the stock does happen to pull back, number one. And in terms of your watch list, look for stocks that are really tightening up, showing that they're under control despite all the volatility under the surface, and then see if they can't pop out of there in big volume, maybe on a bullish earnings report. So some names I had in mind here, ones that have shown great volume. Amazon.com, I mentioned this on the last weekly review. It kind of formed a base here, like the market, actually a little bit longer. Reported earnings, actually missed the earnings report, but it's the reaction that counts, not the news. And it was big volume to the upside, kind of a breakout. Now, is this, up and away from here? Maybe, but I think that big volume, especially on a big liquid stock like this, is telling you that investors are piling in. And it gives you some confidence that if the stock does pull back a few points, there should be some other buyers. Fortinet FTNT is another one. This is a smaller cap name. It's had a big run here, but had a nice shakeout, shook a lot of people out, really hung around, wasn't looking too good, but reported great earnings, and you had a huge volume clue gap to new highs. Something like this, it's going to be more volatile than an Amazon percentage-wise, but again, you get some tightness or a little bit of pullback, you're thinking that this move was decisive and there's probably going to be some buyers on weakness. In terms of things to look for coming up, stocks to look at, Accretive Health, this one's a little thinner. It's had a big run, but it's very tight here, a nice constructive pullback. No earnings date as of yet, but ideally you want to see this really thrust above maybe 27.5, 28 on big volume. It's buyable. Green Mountain Coffee remains very tight ahead of its earnings next week. Again, big gap on Starbucks news. And the stock really is just quieted down. Nothing's much going on, no news. But that kind of action can kind of be, the stock can actually play possum before getting going. So that's one to watch. Chicago Bridge and Iron, CBI. This is an interesting example. The stock actually was down on earnings, but notice how it was, it's this day right here. Notice how it came down near its 50-day moving average, found support, closed up here. And if you do look at a weekly chart, it's actually closed right around the 40, 41 level many weeks in a row. That's kind of a sign of support and accumulation. If you get a big breakout, maybe above 42, 42.5, that's one to look at. And finally, not the most exciting name, but Estee Lauder. A lot of retail stocks are looking good. Again, nice uptrend, pretty tight in here. It looks like it's starting to emerge. It has earnings next week. If the stock can maybe hang around this level for a little bit longer and then break out, it could be one to watch for a nice conservative growth stock play. Well, that's all the time I have for today. Thanks for listening. And be sure to come by again next week for another Cabot Weekly Review.